Hi, everybody, and welcome to Managerial Finance and Business 309. And here we're going to take a look at an introduction to corporate finance. Now, you may notice the difference of those terms, managerial finance and corporate finance. And you may think, oh, this is only finance that's applicable to the corporation. But I think managerial finance or business finance may be even a better title because these decisions that you're going to learn to make are applicable to all businesses. And for that matter, maybe most importantly to some of you, for personal decisions that you'll be making along the way. So let's get started. Here, we're going to define the basic types of management decisions and the role of the financial manager. And then we're going to explain the goal of financial management and articulate the financial implications of the different forms of business organizations. And then lastly, we'll explain the conflicts that may arise between managers and owners. Owners, of course, in a corporation would be your stockholders. So if we look at a quick chapter outline here, we've got finance, a quick look, then corporate finance and the financial managers, the forms of business organization, the goal of financial management, a possible agency problem and control of the corporation, and then financial markets and the corporation. Okay, so we usually group financial topics into five major areas. And here they are: corporate finance, investments, here, financial institutions, international finance, and fintech. Corporate finance is the focus of this textbook. Investments deal with financial assets like stocks and bonds, but also we invest in equipment and other items that we purchase, hoping that we will make a profit on those items. We'll take a look here at some career paths. Most directly for a finance career, you might want to think about being a financial advisor, a portfolio manager, or a security analyst. But I was a chief financial officer. And believe me when I tell you, I made lots of finance decisions along the way. So no matter where you go in business, the lessons that you're going to learn are going to benefit you mightily in both your professional and personal financial decisions. Then we have our financial institutions. Those are the businesses that deal primarily with financial matters, banks, insurance companies, that kind of thing. Then we have international finance, careers that generally involve international aspects of either corporate finance, investments, or financial institutions. And then lastly, we have fintech, and that's a combination of technology and finance. Okay, so if we take a second to review what we've gone through so far, you'll want to know what the major areas of finance are. And as shown on this slide, it's corporate finance, investments, financial institutions, international finance, and fintech. And secondly, besides wanting to pass this class, what do you need to understand, or why do you need to understand finance? Well, I think primarily the most important reason is going to be that you're going to be making financial decisions that'll be important to you personally. When you work for almost any type of company, you'll also be asked to decide how you want to invest your retirement funds personally. But also, you're going to be making business decisions too. And that's going to determine, in many cases, how you get promoted. If you have projects that you know how to sell and sell financially, of course, you're going to be more successful than those that don't know how to sell their projects. Okay, so as we move on, what is corporate finance? So, what is corporate finance, broadly speaking? Well, number one here, what long-term investment should you take on? That is, what lines of business will you be in and what sorts of building machinery and equipment will you need? I have made countless decisions based on using the tools I'm going to present to you in this course as to how you would evaluate those kinds of decisions, how you decide as to whether it meets the criteria for return on investment, as well as better analyzing risk with a capital R. Number two here, where do you get long-term financing to pay for your investment? You have basically two kinds of avenues. One, you can borrow the money from a bank, or you can sell some stock to other owners and have more shares outstanding. And then number three, how will you manage your everyday financial activities? Collecting from your customers the accounts receivable and paying your suppliers your accounts payable. All those decisions will involve knowing how to make those decisions in a convincing and compelling way to your senior managers until you become a senior manager. And then you will expect those same kinds of techniques to be used to convince you to spend corporate money. All right. So the financial manager. Here, the owners. The owners in a corporation, of course, are the stockholders, and they're usually not directly involved in making business decisions, especially on a day-to-day basis. That's pretty much what we do as managers of the company, even a chief financial officer. And then the corporations then employ managers to represent the owner's interests and make decisions on their behalf. The financial management function is usually associated with a top officer of the firm, normally the chief financial officer, sometimes called vice president of finance. And the vice president of finance coordinates the activity. I prefer to call this chief financial officer. Coordinates the activities of the treasurer and the controller. Okay, two branches of the financial arm of a corporation. The controller's office handles costs and financial accounting, taxes, management information systems, those kind of day-to-day receivables and payables and payroll and that kind of thing. The treasurer's office are the money managers. They're responsible for managing the firm's cash, credit, financial planning, and in some cases, capital expenditures. All right. So here's a nice simplified organization chart. Here's our board of directors, the chairman of the board, the CEO. That's appointed by the board of directors. And then and the board of directors are elected by the stockholders. Okay. And so then the CEO has several subordinate officers reporting to him or her, and the president and chief operating officer, sometimes the chief, in my case, the chief financial officer. I reported to the chief executive officer. But as I like to say, my highest rank in the corporation, title-wise, was that of a secretary. I was the secretary on the board of directors, a fairly powerful position. Secretary has the power to engage in contracts and all sorts of things. Um, and and as an officer has the authority to do that. But also we could have some vice presidents of marketing. Here they have the vice president and CFO, and um, the vice president of production or manufacturing. But here, the key thing to know here is the treasurer function and the controller function. The controller function would have our tax manager, a cost accounting manager, the financial accounting manager, and the data processing manager. So the financial accounting manager would do just what you learned in financial accounting. They would do the payables and receivables and payroll and that kind of thing. But also reporting to the controller would be the data processing manager, or MIS function, management information systems. And then separately, we would have a cost accounting manager, and that would be your managerial accounting function that would possibly report to a controller in a large corporation, and even a tax manager. So those are the controller functions. The treasurer function is going to have the cash manager, the credit manager, capital expenditures, and financial planning. Okay. So this is sometimes in a smaller corporation, these treasury functions might be done by the chief financial officer, as it was in my case. So I assumed responsibility for the treasury function. And then I had a separate controller, etc. Okay. Next, try that again. The financial manager must be concerned with three basic types of questions. Capital budgeting, one of the most interesting parts of finance to me. It's the process of planning and managing a firm's long-term investments. So what kind of equipment do you need? And if you're entering a new market, is that market going to be profitable? Everything is related to return on investment. And while we learned in accounting to note what income is, generally speaking, in capital budgeting, we're looking just for cash in and cash out. Our capital structure is a mixture between debt and equity. So our equity is going to be, just as you would expect, retained earnings and stock and that kind of thing. Whereas debt would be our borrowing, our liabilities. Okay, so how much should you borrow? What mixture of debt and equity is best? That's a tricky little subject, and we'll get into that in this course for sure. And what are the least expensive sources of funds for the firm? There are certainly tax implications in that as well. And then we have working capital management, and that's function of short-term assets and short-term liabilities. You'll remember from accounting that our current assets or short-term assets generally are cash, receivables, uh, inventory, and prepaids. And then our liabilities generally are going to be tax liabilities and accounts payable. Okay, so the difference between current assets and current liabilities is working capital. And you need working capital to drive your business forward. That looks like a good place for us to stop this video. And when we return, we'll continue on with corporate